Run on Sunday.
I was a lot younger when that was taped.
They taped it yesterday. So how has the New York Stock Exchange handled this HFT issue?
I don't think the issue can be handled by the NYSE or any of the 60 market centers in the country. I think it's got to be handled by the regulators. I think the SEC, the Fed, the Treasury, those who compose the market committee, the oversight committee, have got to bring our regulations in line with the trend and strategies that you see in the market.
Do you trust them to be able to do that, though? I mean, do you trust the regulators who don't have knowledge?
Sandra, what they have at their, I think, beck and call are people in the community who would be happy to lend their time and talent to an overhaul to bring the regulations in line with current technologies and strategies.
I just want to say one thing to that. I hope that Mary Jo White at the SEC watches Wall Street Week on Sunday to understand from Dick exactly what the issue is and why they should bring him in to sit down with them and explain what they need to do.
Because it's a different market right now. How fractured are things right now, Dick?
Well, think about it in this context. IBM, a bellwether that everyone can relate to, trades in 60 different venues. Now, can anyone tell me what the last sale in IBM is if it's trading in 60 different places? Some are completely transparent, some are semi-transparent, and some are dark. I mean, you've got to be kidding me.
Yeah.
I mean,
Which is why when the New York Stock Exchange stopped trading, it wasn't a big deal.
Yeah. And it's not only the algos, too, right? It's the ETFs are taking up 30–40% of all trading now.
I would make the
creates
case
volatility and dislocation.
You're right, and I would make the case you're in that the ETF, the combine, okay, and the disaggregation of ETFs is the newest form of program trading. Okay, it's index arbitrage. I'm buying the pieces at a cheap level and selling the unit, or buying the unit at a cheap level and selling the pieces, and that's fine. You don't regulate people out of the market. You regulate their conduct in the market.
In an effort for growth, to have more products and more frequent trading of products, I think we lost our way in the sense of what retail investors want is transparency, and they want to know exactly what they're buying and selling.
By the way, which is why the ETF business has been so successful, because it's transparent.
Correct. ETFs are transparent. But the way people are trading against them, as Dick has pointed out, is creating an unfair advantage to many.
Yeah. Well, and that Monday morning, right? That big washout.
Last Monday when the market was down 1,000 points.
A couple of weeks ago, I mean, that was all ETF orders put in over the weekend at opening market levels. Right.
And they were limit down. So some of the companies within an ETF were not open. They could not open.
And then you created all these little flash crashes.
Yeah. So, and that is fundamentally the reason that the public doesn't trust the market today.
Yeah.
That we have sent millions of investors to the sidelines, and what have they done? They've parked their money at a zero rate of return.
And unfortunately, they are missing out on returns, long-term returns for equities. Jurrien, good to have you on the show today.
Thank you.
Thank you so much for joining us. Jurrien Timmer there from Fidelity. Coming up.